Congressman Ringgold and the members of the committee, my name is Chris Wagner. I'm the Commissioner of the Small Business and Self-Employed Division of the Internal Revenue Service. And accompanying me this morning is Ms. Rebecca Sparkman, Deputy Director of the Operations and Policy Support of the Criminal Investigation Division of the Internal Revenue Service. Thank you for the opportunity to testify at this hearing on H.R. 4976, the Internet Gambling Regulation Act and Tax Enforcement Act of 2010, sponsored by Mr. McDermott. The legislation would, among other things, impose an Internet gambling license fee on Internet gambling operators and an additional tax on unauthorized bets and wagers. My purpose here this morning is not to discuss the pros and cons of this legislation, but rather to talk about the present law as it relates to gambling income and wagering. Under present law, the gambling winnings of an individual are fully taxable and must be reported on his or her individual income tax return. Gambling income includes, but is not limited to, winnings from lotteries, raffles, horse races, and casinos. Gambling winnings include cash winnings and also the fair market value of cash prizes such as cars and trips. The payer of the gambling winnings is required to issue a Form W-2G with respect to certain gambling winnings or when the winnings are subject to federal income tax withholding. An individual may deduct gambling losses only if he or she itemizes deductions. Moreover, losses may be deducted only to the extent of winnings reported on the individual income tax return. In order to deduct gambling losses, the individual must be able to provide receipts, tickets, statements, and other records that show the amount of both the winnings and the losses. In addition to the taxation of winnings, present law also imposes two types of taxes on individuals who handle wagers on a regular basis. First, a tax on wagers must be paid monthly by those who are in the business of accepting wagers, conduct a wagering pool or lottery, or are required to be registered and receive wagers for or on behalf of another person, but did not report that person's name and address. For legal wagering, the tax is 0.25% of the gross wager due monthly, and for illegal wagering, it is 2%. Wagers that are subject to tax include those made in for-profit betting pools and for-profit lotteries, as well as bets placed with professional sports bookmaking concerns. Activities that are exempt from the tax include state-licensed parimutuel horse racing, high-lie and similar events, state-sponsored lotteries or sweepstakes, and coin-operated devices such as slot machines and video games. The second type of tax is an occupational tax imposed on individuals who accept wagers for themselves or other people. The tax is $50 per year for legal wagering and $500 a year for illegal wagering. These individuals must also file a registration form with the IRS and renew their registrations annually. The main source of revenue for legal wagering are sports books located in Nevada and Delaware, and entities that sell pull tabs. Sellers of pull tabs include bars, taverns, Native American casinos, and tax-exempt organizations such as VFW halls. Most of the cases are obtained as we have referrals from police agencies. In general, the excise tax program examines about 40 to 50 non-filers annually. Illegal gaming operations, including bookmaking, numbers, internet gambling, and some charitable gaming operations, contribute to the tax gap and thus are areas of concern for tax compliance. We do not know how much money is lost from illegal entities failing to pay the wagering tax. However, it appears that internet gambling is a growth industry. According to the GAO, since the mid-1990s, internet gambling operators have established about 1,800 e-gaming websites in locations outside the United States. In fact, U.S. internet gambling sites using offshore IP addresses currently provide a repository for credit card gamblers for billions of dollars of untaxed sports wagers. Much of this internet business escapes taxation due to foreign-based operations located in offshore tax-haven countries. The IRS, through its Criminal Investigation Division, continues to have an enforcement role in the illegal gaming industry and to support regulatory and legislative initiatives aimed at eliminating an environment conducive to illegal gaming. During fiscal years 2008 and 2009, and in the first half of fiscal year 2010, the Criminal Investigation Division pursued 24 cases involving internet and online gaming. Majority of these cases involved multiple allegations, including tax, money laundering, racketeering violations. Since 2008, 2 individuals have been sentenced on tax charges and 3 for racketeering. Mr. Chairman, this concludes my oral testimony. I'd be happy to take any questions.